Hello, I'm Gordon Balmer, Executive Director of the Petrol Retailers Association, and welcome to our first Business Rates webinar delivered with the Valuation Office Agency. Business rates are a cost of doing business, and it's vital you obtain the correct valuation for your company. I hope this webinar provides you with some insights on the latest thinking, and don't forget the PRA has lots of information and contact details of companies where you can get assistance on this matter on the members' website. This webinar has been pre-recorded and made available to you to watch at a convenient time. It's my pleasure to introduce Dave Hughes, who is a specialist valuer of petrol stations and a chartered surveyor at the Valuation Office Agency, and joins me to talk about how the agency values properties, including petrol stations, for business rates. Before this, I contacted members to ask you what you wanted to know from the VOA today. I'll put your questions to Dave later in the session, and we'll do our best to answer these. So let's crack on. I'll hand over to Dave now to tell us more about valuing petrol stations for business rates.
Thank you, Gordon, and good morning and welcome to all of you. As Gordon says, I'm Dave Hughes and I'm a specialist valuer and chartered surveyor here at the Valuation Office Agency. And a big thanks to anyone joining us. It's the first webinar that we've done with the Petrol Retailers Association, and we hope that people find it useful. So, the first thing I'm going to talk about is set some context about who the Valuation Office Agency is and what we do, and then set about what we're going to cover here today. So the VOA is an executive agency of HMRC. We are the public sector's property valuation experts and advisors. We're responsible for the valuation of properties across England and Wales for both business rates and council tax. We value business properties so councils can calculate business rates bills accurately. But it's important to mention from the outset that here at the Valuation Office, we don't set government policy. We carry out our valuations both independently and impartially. Central government, specifically the Treasury, sets tax strategy and policies around business rates. The Department for Levelling Up, Housing and Communities are responsible for business rates legislation. Today, we will share with you an overview of how petrol filling stations are valued and what this means for business rates. And as Gordon mentioned earlier, we'll also answer some of the questions that you have asked in advance. And we'll also share with you links to further resources, including a simple written explanation of how we value petrol stations after today. So let's talk about business rates. And to kick us off, I'll just do a short recap on what they are. Business rates are worked out based upon a property's rateable value, whether that is a shop, an office, a factory, or a petrol station. And that's what we're responsible for at the VOA, calculating each property's rateable value. For most valuations, including petrol filling stations, we use rental values as the basis. So with this method, rateable values are effectively what we believe the open market rental value of a property could have been let for at a certain date. What we're talking about effectively is what could be achieved in rent if the property was vacant and up to let on the open market, rather than what might be actually being paid. For example, if a rent was being paid based upon some sort of indexation or a fixed amount from when a lease was granted, we're talking about what we believe the open market rental value would have been. So in terms of how bills are worked out that the councils deal with, it's worth reminding people that the rateable value is not the same as the business rates bill. What local councils do is use those rateable values that we set to help calculate the business rates bill. And those bills are worked out by multiplying the rateable value that the Valuation Office Agency sets by a multiplier, then applying any reliefs, which I'll come on to shortly. And that multiplier that is applied to the rateable value is set by central government. In terms of reliefs, the bills that you receive for business rates may be discounted by one or more of business rates reliefs that are available. They are, as I said earlier, dealt with by the local council, but the slide you can see in front of you shows some of the reliefs that you may be eligible for. For example, if the rateable value on the property in question is less than 15,000, if you are classed as a retail within the retail, hospitality or leisure industry, which generally includes petrol stations, and in the last spring budget, the Chancellor confirmed that this type of property will continue to receive 75% of their rates liability of up to a maximum cap of 110,000. Other reliefs that you may be eligible for can be if you own a property and it's empty or part of it is empty, or if it's being refurbished, if you make certain improvements to the property that could increase its rateable value, if rates change by more than a certain amount of each revaluation, which I'll come on to a bit later, or if you're in financial difficulty. The rateable value, remember, which the VOA sets, will often determine which reliefs you may be entitled to, but your local council is responsible for anything to do with reliefs and bills. So any questions or any queries on those sorts of issues, it's your local council who you should contact if you feel you may be eligible for any reliefs. I mentioned a revaluation earlier. So what is a revaluation? Well, a revaluation is where the VOA updates rateable values to reflect changes in the property market, and we do this on a regular basis. The last revaluation came into effect on the 1st of April 2023. Now, I said earlier that rateable values reflect what we believe the open market rental value of the property will be at a specific date in time. This is usually 2 years before the rating list comes into effect. So for the rating list, the revaluation that came into effect on the 1st of April 2023, that valuation date that we have to value all properties at is the 1st of April 2021. Now, when a revaluation takes place, this can impact bills, and you may have noticed a change in your bill. And the changes in bill, if rateable values have changed, will reflect any changes within the property market that we believe have taken place since the last revaluation was carried out. That was back in 2017 on the 1st of April, with a valuation date of the 1st of April 2015. You may also have received transitional relief, which are there to, when rateable values change at revaluation, whether up or down, there's transitional relief applied by local authorities to help phase in any particular changes in rateable value. And on gov.uk, there's a lot of facts and figures and information on whether to determine if you're entitled to transitional relief. But the main point is that it is there depending on whether your rateable value goes up or down, and that any changes in bill can be phased in gradually. Revaluations themselves have occurred frequently over the last 20 years or so, but as part of the VOA's commitment to delivering reforms to the business rate system, which I'll talk about later, we're now moving towards revaluations every 3 years. So I mentioned earlier that the last revaluation came out on the 1st of April 23. So the next revaluation is due on the 1st of April 2026, with a valuation date 2 years before. So that will be the 1st of April 2024. So because of that and the timing, we're now well underway into preparing for the next revaluation, which, as I say, will be effective from the 1st of April 2026. Accordingly, some of you may recently have received a letter or a form from the VOA asking for information on trade and also whether the property is rented. If you haven't already received one, you will likely receive one in the next month or two. We ask for this information because it helps us value petrol filling stations accurately and ensures that everybody pays a right and fair amount of business rates. So I would encourage people, if you've received this form, to complete it and send it back to us. It is a statutory form that does have to be filled out when it's issued, and there are penalties liable if forms aren't returned within 56 days. But to repeat the point I made earlier, we require that information to help us accurately value your property for business rates. Once we've valued all non-domestic property, so we have over 2 million to value, shops, offices, factories, petrol stations, pubs, we publish a list of draft valuations. This should be published by the end of 2025, a draft list of rateable values. And what that does, that gives ratepayers the opportunity to check their rateable value before they come into effect on the 1st of April 2026. So when that draft list comes out, you're able to make sure that the information that the VOA has used to calculate your rateable value is correct, and let us know if it isn't. And as I said before, final valuations are then published on the 1st of April 2026. Check, challenge and appeal. If the details that we hold about your property are wrong, you can let us know about this at any time, regardless of whether a revaluation is taking place. This process is called a check. And making a check is the first stage in our check, challenge, appeal process, which is a way of us managing business rates assessments. The first stage, as I said, is a check, and that must be completed and for any facts of the property agreed before you can challenge your rateable value if you believe it is wrong. And you can do both of these things online through a business rates valuation account. What I'll do now is quickly sketch out the timeframes that are involved in this check, challenge and appeal process so you know what to expect. Once the initial check is submitted, the VOA has 12 months to administer that. However, we do aim to deal with 90% of checks within 3 months of receipt. If you subsequently, after that check has been made, decide to challenge a valuation, you need to do this within 4 months of receiving the original check decision from the VOA. And on average, it's currently taking us just over 6 months to deal with a challenge. Once that challenge is resolved, if you still believe that your rateable value is wrong, you can ask an independent valuation tribunal for a review if you don't agree with the VOA's decision taken at the challenge stage on the rateable value. The valuation tribunal is independent of the VOA, so once a case goes to an appeal, it is something that the tribunal manages. But if you are thinking of challenging a rateable value, I would strongly recommend you sit down and read the guidance we have on the gov.uk first before you get started, which we can circulate after this session. So that covers some general basic principles about business rates and what we value and why. We're now going to talk about petrol filling stations in a little bit more detail. So how do we value petrol filling stations is the number one question. So when we value property, we use recognised valuation methods approved by the Royal Institute of Chartered Surveyors, known as the RICS, and they're used for many purposes, not just taxation. The methods that we use depend on the type of property and the range of evidence available. For petrol filling stations, we use the rental comparison method. I said before that we're looking to determine the rateable value on the property based upon what we believe its rental value would have been at a specific date and time. The date and time is called the AVD, the antecedent valuation date. So in order for us to do that, we collect rental evidence on petrol filling stations on rents that have been agreed on the open market between a willing landlord and a willing tenant around that AVD, around that anti-valuation date. So we collect that evidence. I mentioned earlier about the forms that we send out, and one of the reasons that we do that is to collect evidence of rents for petrol filling stations. We do need to bear in mind, of course, that sometimes a rent paid may not reflect the true open market value of the property if let from a willing landlord to a tenant. For example, the rent paid may include certain conditions that could affect the rent. For example, if an oil company leases a petrol station out to an independent, it may be that as part of the agreement, the independent has to purchase their fuel from the oil company, who then receives guaranteed fuel sales. In return, the rent offered by the oil company may be lower than what the petrol station might be worth on the open market. Similarly, we also come across rents, for example, where there's a connected party between the landlord and the tenant, or perhaps a rent review. It may be an indexed or a fixed increase and not necessarily what the open market rental value would be. So we're looking at rents, of course, and we're also looking at the station's earning potential. And this is a key phrase known as fair maintainable trade. It's a key phrase used for numerous classes of property, including petrol filling stations. So fair maintainable trade, what does that mean? So the fair maintainable trade simply means the earning potential of a property. What could a reasonably efficient operator of the property expect to turn over, to achieve in trade? And we use the concept of earning potential rather than the actual trade, because for some types of property, the actual trade passing could be deceptive. And an obvious example is public houses, pubs that are also have regard to trade. If, for example, a celebrity started to run an existing pub and trade jumped up through the roof, there would be an element of that trade, part of it attached to the name of this celebrity. And if that celebrity vacated, trade would in all likelihood settle back down to a reasonable, fair, maintainable level. We would not value that property based upon the trade achieved by the celebrity, because that wouldn't be what we consider to be fair, maintainable trade. We're valuing the property itself and what trade that could achieve, rather than a business model or a particular operation. And as I said before, we need to ensure that the valuations that we do are based upon the trade a reasonably efficient operator could achieve. For the vast majority of petrol stations that are operated by what we would deem efficient operators, the actual trade achieved is generally indicative of what the fair maintainable trade is. In terms of petrol filling stations, and we're valuing them again, as I said earlier, on what we believe their rental value would be at a specific date and time, you may ask yourself, what has trade got to do with that? Well, by looking at the trade at petrol filling stations, this helps us understand what a reasonable rent might be for that particular petrol filling station. Before signing a lease or renting a petrol station, any prospective tenant would want to understand what the trading potential of the property is, what the history of trade has been leading up to that point, and would factor this in to what rent they're willing to pay. For example, all things being equal, a modern petrol station in a prime spot, a busy A road, perhaps a large size with plenty of facilities, will likely achieve more trade than an older, inferior forecourt, perhaps on a cramped site in a quiet rural area with limited custom. It's likely that the more modern one, busier one, will bring in more trade. Naturally, it can be impacted by pricing policies, but all things being equal, the modern, larger, busier one will bring in more trade than the older, smaller, quieter one. So what we do is, as well as asking petrol filling stations for rental information, we ask all petrol filling stations to provide information on the trading performance, and this helps us calculate an accurate rateable value. For petrol stations in particular, we consider the various income streams that a typical petrol station may receive, for example, fuel throughputs, shop turnovers, any valeting or car wash services. Plus, we do consider and reflect any factors such as lower profitability on income from, say, fuel cards or bunkered fuel. So in summary, all things being equal, the greater a petrol station's trading potential and fair maintainable trade, the higher its potential for a greater rent, and consequently, the higher its rateable value may be. Hopefully, what I've talked about gives a good overview of some of the business rates basics and some of the key factors relating to petrol filling station that we consider when we're valuing them. And I must stress that the methods that we use are established, and we've adopted those in collaboration with the petrol industry, including representatives for the PRA and Fuels Industry UK, formerly UK PIA. So I hope people found that helpful, and I'm now going to hand back to Gordon to introduce some specific topics and questions that you've submitted in advance.
Thank you very much, Dave, for that overview. That was extremely useful. Now I'd like to get into some specific questions I know PRA members frequently ask me about. The first issue is on electric vehicle charging points. How does the VOA take electric vehicle charging points into account when valuing petrol stations?
Thanks, Gordon. So the electric vehicle charging points are an emerging addition, if you like, at some forecourts, and it's an area of the market that we are closely monitoring and keeping an eye on. Currently, electric vehicle charging points are not valued for business rates when they're added to an existing forecourt. But we are learning more and more about what's going on in the industry in that regard. We know that some operators have added their own EV charging point infrastructure, whereas we know that others have decided to lease part of their site out to an EV company in exchange for a rent. Other operators, it's presumably just not the right time. They don't believe it's the right time for them to do it. So some of the things we're looking at the moment are we're reviewing some of the rents that are paid for these charging spaces and considering what the approach should be. But to give some reassurance, our approach to EV charging points is still in its infancy, still in its early stages. No formal decisions have been made yet in terms of how they may impact rateable values. And we are doing, as we always do, working with the industry and gathering information to try and understand how we should treat them. So we will obviously keep you up to date, Gordon, on any sort of on how that area of work progresses. But at the moment, it's something that we're looking at.
Thanks, Dave. So one of the issues in the take-up of electric vehicles by motorists is the lack of charging points. So we're going to have to think very carefully on how this is handled in the future. The second question I get asked a lot by PRA members is why are their forecourt shops valued differently to standalone convenience stores?
Yeah, no, thanks, Gordon. An interesting question. So broadly speaking, we need to remember that we're getting to the same outcome whether we're valuing a petrol filling station or a convenience store. We're getting to what we believe its rental value would be as at a specific date and time. And for both types of property, we use the rental comparison, which basically means that we obtain rental information for both types. So for petrol filling stations, we obtain information on the rents that are being paid and the trade levels that are being achieved. And we do the same for convenience stores in that we obtain rental information on those types. For petrol filling stations, as I mentioned earlier, we need to use a measure to value what those properties are worth in rent. And for a forecourt shop, the measure that we use is the turnover, the fair maintainable turnover. And one of the reasons that we do that is because when forecourts are leased or even sold, the turnover in the shop is usually the determining factor in what the value of that forecourt shop is. Clearly, a small shop on an extremely busy site may well be worth more than a larger shop in a quiet rural petrol station that doesn't get too much trade. Convenience stores, the measure that we use is generally the size of the shop, because that's normally the main factor that prospective tenants use when they're determining what rents to be paid for a standalone convenience store. But the main answer to the question really is that we follow what takes place in the real world. So when petrol stations are let on the open market, when they're sold on the open market, it is the trade that is the definitive factor that impacts the value of that property. So we don't sort of set a market approach, we follow the market approach to how petrol filling stations are valued. And that's what we do. We follow what takes place in the real world and reflect the considerations that a tenant, when deciding what rent to pay for a site, would look at. He or she would look, the main priority would be what that shop turnover is. The other thing that I would say is that the methods that we use for valuing forecourt shops aren't the made in isolation. They're ones that we do in collaboration with representatives for the PRA, for Fuels Industry UK. Those methods are well established, and as I say, they're based upon what happens out in the real world when forecourts are sold or let. And because our job is to define a rental value for petrol filling stations, we're looking at how those rents are determined out there in the real world. Our website does have quite a bit of information on the methods of valuation, and particularly for forecourt shops. So there's more information online if people want to have a look at that. But the main thing to note is that the method that we use follows what goes on in the open market, and the aim for any type of property, whether it's a shop, a factory, a pub, a petrol station, is to determine an accurate rateable value based upon what we believe its rental value would be.
Thank you very much, Dave. Very useful. So following on for this, what happens if important elements like shop turnover, or as we saw during the pandemic, fuel volumes change? How does the VOA take this into account in valuations?
Yeah, as you say, it's not uncommon for fuel volumes to fluctuate. We saw that with the pandemic, and also if there's competition, new competition nearby. So I mentioned earlier that properties are valued at a specific date in time. So the next revaluation was 1st of April 2026, with the valuation date of the 1st of April 2024. Now that valuation date is fixed. So any changes in volume, say, that cannot normally be reflected that take place after that until the next revaluation. However, ratepayers can challenge their rateable value, and I mentioned the check challenge appeal process earlier, if they believe what is known as a material change of circumstances has taken place. And what that phrase effectively means is if something has happened in the locality that has impacted their trade negatively, and potentially the rental value of the petrol filling station, they are able to challenge that. An obvious example is if a new petrol station competitor opened a mile away and affected the volume sold of another petrol station, that petrol station that has lost some volume is able to make a challenge in that regard. And as I said before, they're able to go through that check challenge and appeal process that I talked about earlier. But one of the benefits of more frequent revaluations, i.e. every 3 years, means that any sort of changes in the locality like that, or economic changes that affect values, will be reflected more frequently, hopefully without meaning ratepayers needing to use the check challenge appeal process.
Thanks, Dave. Before I wrap up, do you want to say a few words about the future business rates landscape?
Yeah, thanks, Gordon. So I mentioned more frequent revaluations, and the government have been planning other changes to business rates in England and Wales. We're moving from revaluations that previously took place every 5 years to every 3 years. And doing these more frequently has two main benefits for ratepayers. The first is, as I said before, any changes to economic conditions and fluctuations in the property market can be reflected in business rates bills more quickly. And it also means the system is fairer, because every time there's a revaluation, one of the purposes, it redistributes the overall level of business rates collected by local authorities by reflecting changes in rateable values. So to make more frequent revaluations work, we need to work with ratepayers. So for example, in the future, ratepayers will need to notify the VOA when there are changes in occupation at a property, or changes to a lease or a rent, or to a property itself. And ratepayers will need to provide this information within 60 days of any changes happening. Also, with regards to petrol stations, if we need trade to value a property accurately, ratepayers will need to provide this on an annual basis. So at the moment, it's normally every time there's a revaluation, but again, to help us keep everything accurate and up to date, that may well in the future need to be provided annually. The good thing is most of you will already be familiar, most people watching will already be familiar with providing that sort of information to the VOA. As part of that process, ratepayers will need to confirm that they've met that obligation and reported any changes in the last 12 months. But any reforms such as these are coming down the track, and they will happen in stages. We have already delivered some changes which have meant new reliefs to some types of property improvements, which local authorities will apply to somebody's bill if they're eligible. But there's no action to take at this moment in time. We'll give plenty of notice for any business rates reforms that come out in the future. We'll carry out public information campaigns so ratepayers know about the changes and when they're happening. And I mentioned what it's called a duty to notify, which is when we may ask for petrol filling station operators trade on an annual basis. We would only introduce that once the service has been tested, whether the IT is up to scratch. And as I say, it will be introduced in phases. We're working already with a range of businesses and representatives on these changes so we can work together to make it work for both parties. And we'll continue to involve them as we design and build the systems that make up those changes.
Thanks, Dave. That brings us to the end of today's webinar. Extremely useful, and I'd like to personally thank the VOA for putting this together to give the insights and clarity on how business rates work. As Dave mentioned earlier, we'll circulate this recording alongside some key business rate resources and a written explanation of how the VOA values at petrol stations.